Big bank or local lender? That's what we're talking about today. Pros and cons of both, and some important questions you should be asking yourself before you decide who you're going with. So today, what's up, Scott? How's it going?
What's going on, man? I am excited to dive into this. It's a good follow-up to our conversation last week about rates, and it's like we couldn't have been better timed with our conversation last week. And I think, mortgages are a big topic of conversation as we've seen. On topic, what do you think? Big bank or local lender? What are some of the pros and cons?
Yeah, so I mean, we've of course, in this business, right, we go through a lot of figuring out which one is the better option. And I'd say, like anything else, it really depends on the individual. So some of the pros with big banks, I think people are just more comfortable with them, right? You hear a lot of times, well, I have my student loans with them or my checking and savings account. I do all my banking with this company. So that's just where I'm comfortable. So that's one of the pros. One of the negatives or one of the cons would probably be, with a big bank, you're one of thousands, going through their loan processing department. So that personal touch might be lacking a little bit. Why don't you take over local banks? Pros and cons.
Yeah. So, I mean, I think it's kind of like the exact opposite, right? Of the big bank. Like I always, feel like my buyers have the best experience when they work with, whether it's one of the local lenders that I'm referring them to, or whether they have like a close friend or family member who's had a good experience with a local lender and they end up working with somebody that way. It just seems like there's more, again, that personal touch. It's a little bit of that effect, especially when you work with people that like you and I work with on a regular basis. It's that accountability of if that lender messes something up along the way or doesn't provide that same, especially with our lenders, right? Like I always demand that the people that I work with deliver the same level of service that I deliver to my clients, So I think there's an accountability factor with working with someone local. It's putting that face to the name that you're, borrowing from. And, I think a con for the local lender, I don't know that there is one. Like I just tend to think, you're best off finding somebody local, because the big bank, like you said, to me, you're just another number. You might manage to get a slightly better rate, especially because, like you mentioned, I know sometimes the big bank will say, hey, do your loan with us, set up auto pay out of your checking account, and we'll shave 0.25% off your interest rate. So you might find some programs like that, but I think that's where we lead into our next topic, related to this is, how do you go out there and kind of like rate shop? And like, if that is a determining factor, should it be? So what are your thoughts on that, man?
Yeah. So one of the things I will just real quick on one of the cons that could be of a local lender, right, is like the big banks. Yes, you're one of thousands, but they do have a system in place that gets you from the starting line or the start to the finish, right? May not always be the most personal touch. It may not always be the quickest, but there is at least a system, right? I think if you use a local lender and they're maybe not the best local lender, one of the cons is there may not be that system in place, right? I came across a local lender where it was like we were faxing stuff or snail mailing things. And in today's day and age, to keep things moving, they have to be staffed properly, right? So it's important that they have the right amount of processors and underwriters. Typically with a bigger bank, that system will be in place. It just won't go as quick. But that would, if anything, on the local lender con, just to be fair to both sides, I think that could be something just to be aware of and could be a con. It's not always.
Yeah. And I think along that line, that is why it's so important to, get the recommendation either from your realtor or from that, close friend or family member that you can trust, that when they say, hey, we had a great experience with so-and-so, or maybe the inverse of that is, hey, I'm thinking about using this person. What do you think? And all of a sudden you're getting the reports, oh, it was miserable, terrible experience. Like you want to avoid having that kind of bad experience. So getting that firsthand, referral from someone that you trust, I think is really important.
Yeah. And I mean, so let's just jump into that, right? It's like, how do you find the right lender? I think we look at, you hear a lot of like you go online and you see one interest rate, right? I think that's how a lot of people start their shop is the interest rate is the most important thing, which it is important. But they go online, they see a list of what Chase, Bank of America, Rocket Mortgage, all these, big banks are all you. And then you just kind of click around, and before you know it, you're connected with somebody who you've never met before, hasn't been recommended to you. And the reality is you're just kind of a number to them, right? So that's one way that people go about finding loans. And what you tend to find is that once you actually pull back the curtain, if I may, you actually find that that rate they were advertising has a lot of strings to it. It might not be as good as it sounded. And you had mentioned the other way to find a lender, right? They may be with a big bank, right? Maybe they are, or maybe they're a local lender. But I know I recommend people that I work with all the time. Scott, I know you do the same. And there is a little stigma out there about, right? Like, you see it a lot with home inspectors mostly, but like, don't use the person that your realtor recommends, right? What do you think about that?
Well, so it's interesting as we're having this conversation. I'm even thinking another con to big bank, and it's been especially important in a market like we've experienced lately, is that oftentimes you mentioned the system that a big bank has in place, and yet one of the parts of that system is oftentimes they're grabbing an appraiser from a much larger pool, where you might end up, let's say you're buying a house in Bergen County and your big bank pulls an appraiser to go out and do the appraisal on that property, and that guy's coming from somewhere down in South Jersey,
Right.
has no local market knowledge, and yet now he's expected to do an accurate appraisal on that home. So it's interesting. Like, I don't even know what tangent I'm trying to go on here, but it just popped in my head that's super important. And one of the things that I've always appreciated is, my experience with going through the appraisal with local lenders has always been better. And I feel like every time I hear a horror story of what the heck happened, this house under appraised by $100,000, it typically has been associated with a big bank. So just food for thought there.
Fair enough. But then as far as, realtors recommending agents, realtors recommending mortgage lenders, like one of the reasons we like to work with our own people is a lot of stuff that you alluded to before, right? We have a relationship with them. One of the things I'll always say is like, I'm only recommending people that I know have done a good job for me in the past. And there's not a lot of room for error there, right? Because this is our reputation, right? These are our clients. Our job is to provide the best client experience possible. So if we have a lender who's not up to snuff and not really doing the right things or communicating properly, they're off that list pretty quickly. But why do you think some people might feel weird about taking the realtor's recommendation?
So I think what happens is, and I think we've talked about this in the past, right? The two different types of agents. If you broke agents down into a really broad stroke differentiation, you have relationship-based agents, right? And you have transactional-based agents. And you and I both fall into that category of relationship-based, right? We really rely on, working with people that are in our close circle of friends, family, right? And then the referrals that we get from them, we're targeting, delivering a great experience that will lead to more referrals in the future. Whereas sometimes an agent that is more transactional based and might just go out there and work with somebody once and then never talk to them again. I think sometimes, clients get that bad taste in their mouth if they might have had an experience with a more transactional type agent who wasn't really concerned so much with the customer service aspect, right? And so they might have referred someone that wasn't that great either, right? We tend to attract like-minded people into our lives. So I know you and I both seem to surround ourselves with similar people when it comes to lenders, home inspectors, right? They're all driven on customer referrals and delivering that great experience. But I think the inverse of that would be, you might have a bad experience and then assign that to the fact that, hey, my realtor put me in touch with this person and I had a bad experience. So just my thought on it. How about you, man?
Yeah, no, I think that's pretty much it. I mean, I think there's, there's a 100 reasons why that might be, but I think ultimately it all comes from somebody had a bad experience once, right?
Yeah.
From a realtor recommending a lender and it was a bad experience. And then whatever stories or spider webs came off of there is what it is. But what I'm really hearing you say, and what I really think, the point of all of this is that it comes down to the customer service, right? And why is the customer service and the client experience so important? I mean, working with a local lender and having a little more control over that client experience. We have lenders we work with, same lender, one lender, and he's been great in helping us get offers accepted, or at least help us put our best foot forward, right? And what I mean by that is basically he'll reach out to the listing agent once we submit an offer and just eliminate any doubt in that, right? And just say, hey, Mr. Seller's agent, I just want to let you know Pete's buyer is very qualified. We've run everything. We have all their docs. You're going to have no issue. And from the seller side perspective, when I'm a selling agent, a lot of times the buyer's agent doesn't even call me to ask me what's important to the client, let alone have the lender call me and just give me that extra confidence. So I think, you're not getting that with a big bank, right? And again, painting with a broad brush, in my experience, I haven't seen a big bank lender that's going to do that.
No, neither have I. I've had numerous lenders, not ones that I work with, but ones that possibly I had a buyer come to me already pre-approved, right? That person that you meet at the open house and says, hey, yeah, I'm already pre-approved. And then I go and I connect with the lender and they've said, hey, if it's after Friday, 5 o'clock, like don't expect you're going to get me until Monday at 9 a.m. And so like, how could you possibly work with someone that is saying that in the real estate world, especially in this competitive market that we've been in? And to your point, right, I've had, because of those strong pre-approvals and because of some of the lenders that we work with, I've had buyers get offers accepted. And I truly think, besides everything we did to prep them for a great offer being presented to the seller, having that lender calling the listing agent and just saying, hey, I'm the lender, working on this deal. Just want to let you know, here's what I've reviewed with this client. They're rock solid. Just giving that little bit of reassurance has been the deciding factor in at least a few of my buyer deals in the past, 24 months getting accepted. So if you're that buyer out there, bashing your head against the wall saying, what do I got to do to stand out here in these multiple offers? Well, choosing the right lender might be a big step in the right direction. I know it's been a deciding factor for numerous buyers on my side of things. So
for sure. No, that's huge. And I think something you said too, is like picking up the phone at, I'm not saying call your lender at midnight or 1 a.m, but after 5 on a Friday, like you should still be able to get your lender on the phone, right? Like 6, 7 o'clock, if it's something that needs to be discussed. Just look, for a lot of people, it's a very stressful process, right? There's a lot of moving parts, and just knowing that you've got a team around you who you can communicate with. And even if it's not anything necessarily urgent or needs to be addressed right away, just knowing that they'll send you a text message back when they can't answer, say, hey, I got your message, or hey, I got your call, I'll call you back tomorrow. Like that can just make all the difference in like the peace of mind and not letting your imagination run wild sometimes.
And it's huge too. Yeah. Like the communication side of it, I think, is what I'm like, the more we're talking, the more I'm leaning like full blown to the local lender side, because one of the other things that we've had this discussion now, or, we're talking a lot with our buyers, is even if you're thinking of buying a home anytime in the next 12 months, like connect with a lender now. So I know that, every lender that I work with locally is great about keeping both us as the agent, but also the client in the loop on any major changes they might see coming a few steps down the road, right? So in this volatile market where we might see rates climbing, you want that lender that's keeping on top of it and then communicating that back to both you and your agent. So, hey, if there's a forecast that we might see a jump in point by, 0.5%, we want to know about that so that we can position you to, make the best decision for you and your family. So,
yeah, it's such a great point. It's like get ahead of it before you're ready to actually go out there and start seeing homes, create a relationship with somebody. It can definitely benefit you in the long run. And let's wrap this up with the biggest question, right? What everybody wants to know: how do I shop for an interest rate and get the best rate? Like, how do I shop around? How do I make sure I'm getting the best rate?
Yeah, so I think the best thing you can do, right, is to your point earlier, is like you can go online and like pull up rates, right? But usually there's an asterisk or a couple asterisks that are saying, hey, look below, and then there's a whole bunch of fine print. So what you want to do with any lender that you're going to work with is ask them to simply get you a copy of the loan estimate, which is going to kind of show a one-pager explanation of not only what rate you're getting, but like, are there points that you are paying for to get that rate, right? You might get a phenomenal rate, but end up having to come out of pocket an extra, couple $1,000s all the way up to, I've seen like $12,000 in points to buy down into a good rate. So I know one of the lenders that we work with, like, has said, listen, a buyer can basically get any rate they want. It's just going to cost them if they want something that's, unheard of on the market, right? So get that loan estimate, because that's going to allow you to go out and really compare apples to apples. So that would be my one tip: is work off a loan estimate, get something concrete. And if your lender isn't willing to give you that, that's a huge red flag.
Yeah, so that's definitely a huge red flag. And just to kind of just clarify what buying points means is, basically you're offered an interest rate based on your qualification, loan amount, credit, income, debt, all that kind of stuff. You get your base rate, what you're going to qualify for, and then you can buy that rate down. So basically it's a percentage off of the loan amount, and you can pay before closing a certain amount of cash to reduce that interest rate if that's something you wanted to do. So that's what buying down points is. But yeah, I think that's the big thing, right? The loan estimate is like apples to apples. You want to compare not what somebody's telling you. You want it written out, because I've seen on a loan estimate where it's like, well, yeah, you can get this rate, but the seller has to give you a $14,000 seller concession to buy those points and pay down your rate. That's not a real rate that they're quoting you then, right? And then I would say sometime, I think it's important that when you're first starting off, it's important to have one lender that you're working with, right? Make a couple phone calls, that's fine, but then ultimately decide the one lender that you're going to go out there and shop for homes with, right? Because it just makes the process easier. And now there's that one person. And then once you start targeting a home, and sometime as you're starting to get closer to actually, getting your offer accepted, that's really when you want to shop around, right? When you have an actual offer accepted is great, because you have actual, again, apples to apples. You can go to 2 or 3 lenders and say, these are the taxes, this is the price, this is the down payment. Now, give me your best. Yeah. The only thing to keep in mind with that is, once you get your offer accepted, there's a lot of moving parts. So there's a little bit of nuance involved in there. But if you're starting to create a relationship, I think the most important thing is have one lender who you're going to go through the beginning process with. They're going to update pre-approvals for you and help you understand the offers that you're making, what the cost involved is, what the monthly breakdown would be, closing costs, all that kind of stuff. I don't suggest that then you just go and jump ship, because they've done a lot of work for you at that point. But if ultimately getting the best price and the best rate is what's most important, but if you're talking a few, small, pennies,
you got to get that loan to the closing table. And that's where I think customer service comes back into play. So I think it's rare to see a bank like without some sort of, something behind the curtain, right? Beat rate at such an astronomical amount that it's worth jumping ship. But
yeah, right. Typically when you see, if you're looking at 3 and 2 of them are in line and then one's way lower, get that fine print. There's something you're paying for it one way or the other, right?
Nothing that's where that loan estimate comes into play. Yeah. So good topic. I mean, I think this is our longest episode ever. But I hope we covered a lot of good stuff. And if you guys are left with any questions about what to do when it comes to choosing the right lender, you know what to do. Reach out to Pete or I until our next episode, right?
That's right. And if, I think one of the best things you said in this whole video is like, don't wait until you're ready to go out there and start shopping for homes. If you want some recommendations for some qualified lenders, give us a call. We'll get you hooked up. No pressure. It doesn't mean you're buying a home tomorrow, but start having that conversation. So I know we're tight on time, so peace out.
Get out there, get educated, guys. Later.